Now I am going to start with BTC because that's generally what's holding the market back. Now I'm going to start with the daily because we are looking at daily moves at the moment, and as you can see, BTC has moved out of this daily structure. Now this daily structure has been quite challenging to map out because you can look at it as a channel or you can look at it as this wedge here with a little bit of an overflow in this area. So we've had a nice lift up. I personally had it like this, but I think this is a lot more accurate, to be honest. As you can see on the daily chart, volumes are coming out of the market, so volumes are moving down. If we compare, for instance, this part of the chart, which is this lift and this lift, to where we are right now, you can see that there is a clear difference in volume. We've had the 20 coming down over the 50. Now this has been an unreliable indicator at the moment. While it shows some direction, it's not it hasn't shown big moves so far. For instance, here we've had a lot of sideways with the 20 crossing both down and then up, and we haven't had an exit out of this space. Now, considering that we're in the final week of August, we are likely to have more sideways until September starts. To me, that's one of the things that I don't personally look forward to, and that's because generally holidays are low volume. Low volume is low volatility, so it's not a particularly favorable time to trade. At the moment, this swing on the daily, which I am counting as this one broke slightly below, so I'm counting this here as a 1, 2, 3, 4, 5, or some people are counting this as a 3, 4, and then this as a 5 because it broke slightly above it. It hasn't been a considerable 5. Usually the blow off top is a little bit more accelerated than what we had here, but that's where it stopped. The next level would have been the 35K. It didn't reach it. It broke the divergence line, it broke the 20 EMA on the daily, and it also broke the weekly support. So we closed below the 50 EMA on the weekly, we closed below the 20 EMA on the daily, and on Friday, I was talking about indicators that show us that we are moving out into the bull run. And one of the signals would be the confirmation on the weekly of the 20 EMA and then holding it. Now we have lost that. So to me, this back test here that looked so nice, because we had the cross, we had the back test, this is invalidated. So at the moment, we are below weekly support. And if you're looking at the stochastic on the weekly as well, just a second. The stochastic on the weekly as well is down, and the RSI is also down. And the RSI on the weekly is coming up from the top and it's crossed the middle line. So we're not looking great for momentum on the week. Sorry, it's not whether it's great or not. We're not looking like we're gonna rehabilitate to the upside anytime soon in terms of a bigger move. Could we do now? If I'm looking at the weekly swings and mapping out the W, push up level 1, back test, continue level 2, M formation, push down. So if I'm looking at this as an M formation, and because we broke the neckline here, we could do another back test of the 20 and then start coming down to the level of the 20K, maybe up again, and then maybe down to a deeper correction around the 702 or the 786 level. Again, I will be talking in more detail about those levels once we see what's going on. But at the moment, the way it's looking, we've lost support, volume is coming down, stochastic on, the weekly is down. So I don't have any signals for a bounce up or some sort of a rehabilitation to the upside or correction to the upside. We don't have any of that yet. Now, on the hourly levels, the situation, we're moving from the weekly to the 1 hour because of how volatility set up this big swing that we are in at the moment. So we had this massive candle drop on Thursday, and it was a bit of a shocker. It was there was a lot of speculation in the market as to why that happened. To me, it's totally normal. It's a correction that needed to happen. I've been looking at this correction for a while. The stock market has corrected as well, not as steep as this, but again, this is a higher risk, so it would have a higher correction as well. Now, this is a big range. This is a 14% range, and ever since we've had this, we have kept moving sideways in a 2 to 3% range. Nothing spectacular. That's why I moved away from trading BTC. On the daily levels, we are looking at holding below at the moment the psychological low, the daily open, and the pivot point. Again, if Monday is to do something, Monday generally corrects the previous move or retraces back to the previous move. So if this is the local bottom and we're going up to backtest that 20 EMA on the weekly, as I showed you previously, we would be looking at a 1-2, and the minimum 1-2 for a bottoming out for this would be the low ADR and the 0.5 level here. While we are holding below these points of reversal, the psychological levels, the pivots, and the daily open, the low average daily range is the target. We do have some indication that we've hit the M1 support, and this is holding, and that indication is in this buyer's candle that we have on the 1 hour. We have a similar one on the ETH chart as well. I'll show it to you. And then we have the stochastic turning up on the 1 hour. So it looks like there is some momentum, how can I say, incentive to move to the upside. However, we haven't yet broken those resistance levels to confirm that move to the upside. The market has been very challenging to read in terms of back tests. I missed this beautiful drop because there was no back test, and I'm not a breakout trader to jump on a breakout. I am a very technical trader. That's my strategy and what works for me. So as much as I feel frustrated when I miss a move like this, my strategy has priority over any gain because it is the strategy in the long run that works. So the market unfortunately didn't give us a back test opportunity to take a position. It just moved down in the space. I think for XRP, for instance, it was a drop in the space of 4 minutes. It was worse than, for the market in terms of liquidity, it was worse than the FTX collapse. It was, I think the FTX collapse was around, it was around 700 million, and this one was 1 billion in terms of liquidations. So that's how bad it was. Again, it's part of a normal natural correction, and at the moment, despite looking so spilly, we are still holding the 25K support. So that's the 25K support. And while we are holding this, let me just move to the daily chart because that's where I will There we go. That's where I'll be mapping out the trades. As long as we're holding the 25K support, we are still within a possible consolidation time frame range. Now, these were our Friday levels, and we only actually stuck here at the bottom of this in between an intermediary support and resistance, because this is the median of this range, the 30K and the 25K, and we stayed between, again, 2%, 26.2 and 25.6, so 600 quid worth of BTC. Now, what are we gonna wait for this this week, or what are we gonna look for in terms of trades? Well, I'm gonna move this support higher to here, because this is the daily support right now, and this has been confirmed and held. Now, on this support at the moment, we have a 1-2 for a bounce up. To me, this is a very risky trade. Trading long at the moment is quite risky, considering we have the 20 coming down over the 200 on the daily. All the EMAs are fanned out like this, which generally indicates reversal. However, I would be moving on the 4-hour and using this peak here as my indicator for the W formation completion. And this is, again, I'm gonna restate something that I constantly use. If this is the W, we're gonna enter on the back test of that support, and we're gonna follow it up to the next level. The next level would be, in my opinion, the 50, as is right now, the 50 MA on the 4-hour. So this would be the pathway for a trade up, and the entry would be, if I were looking for an entry, I would be waiting for this back test. I wouldn't be going in here. I would be waiting for a back test here, a golden pocket or a 702 retracement on the 1-hour time frame, something along these lines. The 20 on the 4-hour needs to be proven as support. At the moment, it's not. It's resistance. It's the first back test, and it's quite dangerous. Now, if we're looking at short positions, we would be looking at what is the next level to hit. I'm gonna add another support and resistance line here, because we don't have it on the daily, but we do have it on the 4-hour. There we go. And I'm gonna place it around here, because that's where our, there we go. I'm gonna blur out the, there we go, the Bollinger, so that we can see the spike here. Now, spikes like these create a lot of interest in the market. The market's very likely to come back to the 25K region. That would be the first short target that I would be watching. At the moment, in my opinion, the short has proven itself with this back test here. I am in a short position in ETH. Where's my, there we go. So the short has already proven itself as an M formation. Pushed down, back tested, and then pushed down here. And it might look like a small range, but if you're gonna look at, why is it, no, it's not 1%. Is it 1%? Has BTC kept so low? Oh yes, I'm so sorry. Yes, it is a very small range. I was looking at ETH, and ETH is like 9%. Yeah, so BTC is a miserable. I feel really bad for people trading BTC right now. So this would be the information backtest move away. This would be the next level of support and resistance. If we're gonna take, again, a deeper correction down, the next level would be over here, 24.8. And I think that would actually bring you a little bit more money with an extra 3.1. Okay, so that's it. That's where we are. We could see, again, I've placed a very tight stop loss on my trade. We could see a spike up around these candles here, 26, 27, which would be again the back test of that 20 EMA on the weekly. I think that's around 27k. So that would be a better entry for a short position down, because that would, if you can catch, for instance, a rejection here, taking a short all the way down to 25 would be a 50%. But again, you would need to be watching it, and you would need to be watching it on the 1 hour to see when it tops out and it gives you that information. All in all, BTC's range are very small. It's good as a practice trade, but it's not good as a gains trade, because you would like to see more a bigger space opened up. Of course, if this is the long opportunity, if we do see New York break above this peak and back test and hold, which is break above the previous peak and hold the psychological levels, that would be, from starters, a 5.6% trade till the 50 MA on the 4 hour. So 50% would be great. Again, nice practice trades if you're patient enough. But the range, in my opinion, is too small to be worth the risk. So these are the two possibilities. I wouldn't long unless I have the 20 EMA on the 4 hour confirmed as support. That's my my mantra. Don't long unless you have that 20 MA or EMA holding as support. For short, again, you might be wanting to see the previous low get broken. In my opinion, it already has with this spike, and now it's the back test, and it looks like we're going to continue lower. But we could be ranging like this for a while. I'm going to have a look at the news when we're done with the trades, with the setup. Now that's the setup for BTC. Let's have a look for ETH. As you can see, ETH is in a bit of a more structured move. I'm gonna change it to the 4 hour. Now there is a I'm gonna change it back to the 1 hour. I'm sorry, because I want to show you something again you might be wondering about. Now I'm taking this as a triangle pattern, and I'm taking this as the breakout. It's broken the previous M here. However, this could be just a sideways channel. If we're looking at this space, the 0.236 retracement and its previous resistance, and we've had 1, 2, 3, 4, 5, 6 touches, so we are looking to break either way. Now I took the risk that I took last night is following the 1 hour and the 4 hour stochastic RSI maxing out before Asia. and I took a 786 entry here at 1688. So a very nice entry, and it allowed me to put 50% of my position in at 5% stop loss. When I wrote to you like an hour ago or so, I moved my stop loss at 1695, a little bit above this previous peak, because if New York breaks that peak, chances are it's going to break out and continue to the upside. If it doesn't break that peak, happy days, it's just another back test and we're continuing down. At the moment, Sydney did this spike here, which was a 702 entry for this peak, and London also did a Sydney pushed up, down, up. London pushed up a little bit, down, and then up again. So they both moved in the same way, but London only did a 0.5, didn't even reach the golden, didn't even have the strength to reach the golden pocket or the 55 EMA on the 1 hour. Only the 20 was reached and a little bit broken as a retracement. So again, the range that I'm watching for is that this 702 correction on this big swing. My next line of support would be 1520, but I'm going with 1540 as target, and that would be 8.3. I don't know why my Bybit says 96. Okay, because I'm always, I'm not paying attention here when I'm measuring exactly this range. Yeah, I think it is 9.6 the way 9.6 or 9.2 the way Bybit okay, let's say 9%. So this is a trade worth doing, even if I don't DCA. Risking at the moment, I'm risking about 2% because of how I pulled the stop loss down, and I'm risking 2% for half of 9%, which is 4.5. So 2% for 45%, that would be 2% at 10x, of course, and for 45 would be again 4.5 at 10x. That would be almost 20-to-1 risk ratio, which is great. So I would be perfectly fine not DCAing in here. However, if this gives me the chance today and starts moving here in a backtest motion and gives me the chance to DCA, I will DCA the next the other half of my capital and put the stop loss a little bit higher. So this would be the move that I see most likely. Of course, I am gonna map out both pathways. At the moment also, it looks like this move might have been quite close to a back test. If I move this line here, I think this might be a back. This here was the back test, move down, and this was another attempt of a back test. Okay, so what is the pathway for these? So for the short position, we have broken, we have back tested, and now we are likely to continue back test again and then move down to a 702. Again, the golden pocket would be where I'm watching for a particular rejection. I put my target at 702 because, again, we are still having a lot of fear in the market, and when this drops, this is going to drop. So I'd rather have the target a little bit lower than higher in these conditions. And And for the uptrend, again, we should break the previous peak, we should turn it into support and then continue. And again, I have placed this as a back test of, there we go, and I think it would be a, there we go, and it would be the back test of the previous level of support and resistance. And